Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is September 30th. We had the quarterly grain stocks out here today, but before we get into that, let's turn over to the grain hedge trading platform and see where we closed off the day. Corn futures trading down a quarter penny, soybeans up 8 1/4 cents, and wheat in Chicago here leading the charge higher here, up 9 1/4 cents. Now this morning we did get an announcement that Dmitry Medvedev signed an order to cut the export tax in Russia on October 1st. So this is going to support Russian exports, but you know, we didn't have, and typically this would, I guess, hurt U.S. prices. It would hurt U.S. competitiveness. But in general, this announcement was in line with trade expectations. Also today, and this is the big piece of news out, is the quarterly grain stocks. It was released today at 11 o'clock Central Standard Time. Let's go over what we saw announced in that report. Notice corn stocks here in terms of billions of bushels was released at 1.731. Now keep in mind the average trade guess was looking for 1.739 billion bushels, and in the last WASDE report, which should be what ending stocks amount to, it was 1.732 billion bushels. So when you look at this, it came in for the most part right in line with analyst expectations. No big surprises, and as a result, no big price changes here today for the grain. When you look at soybeans, you'll notice soybean ending stocks ended up coming in at 191 million bushels. That was below the average trade guess of 205 and below the WASDE report for September, which showed ending stocks for last year's marketing year at 210. So we had a substantial reduction there. Basically what they announced was that the 2014 crop was revised to 3.927 billion bushels from 3.969 billion in the last WASDE report. So this was a substantial revision. It brought ending stocks lower than expected. As a result of that, prices spiked higher, but only for a very short period. They ended up selling off and then bouncing a little bit back. But in general, what's interesting is the trade, I think, looked at this and just said, all right, yes, ending stocks are lower, but this is really not a big deal because right now we're focusing on the new crop, which seems to be reporting much larger yields than originally thought. So that's overshadowing this bullish news about old crop ending stocks, at least for today. When you look at wheat, why did wheat rally here? Well, quarterly grain stocks came in lower than analysts were expecting. The average trade guess was looking for 2.149 billion bushels for this quarterly stocks figure. What we got was 2.089 billion bushels, so lower than expected. As a result, we have wheat moving to the upside here today. We also had weekly ethanol production released out today. What we saw is ethanol production increased 5,000 barrels per day last week to 943,000 barrels per day. Basically what this means is at this point in the year compared to last year, we're up 54,000 barrels per day compared to the same point last year, and we're up 92.75 thousand barrels per day compared to the 4-year moving average. So strong ethanol production early on in the grain marketing season. We also saw stocks fall 118,000 barrels to 18.78 million barrels this week. So when you look at ethanol production, we did see stocks fall. We saw production increase. Production is much better than what we saw last year and better than what we see over the 4-year moving average. This is relatively strong here for corn. Export sales, you want to keep in mind, will be released out early in the trade session there tomorrow. Here's the expectations. Corn, the trade guess is anywhere between 700 to 900,000 metric tons. Soybeans between 1.3 million and 1.7 million metric tons. And wheat, analysts are expecting to see between 250 and 450,000 metric tons. Guys, that wraps up today's show. If you have any questions about what we talked about today or what you should be doing at this point in your hedging strategy, give the office a call. We also have some great cash market intelligence, and with producers hitting the fields here, getting out and harvesting the grain, knowing exactly where you should be selling your grain within a 200-mile radius of your farm after taking into account trucking and storage costs, is absolutely imperative. And this is the sort of technology that producers should be using, you should be relying on, should be taking advantage of. And you can actually take a look at it with a 14-day free trial at grainhedge.com. Again, I'm talking about the cash market optimizer that comes with an account at GrainHedge. So if you open a futures trading account, you get a tool here that was developed by GeoGrain, a sister company here, and really what it does is it helps you keep an eye on the cash market, keep an eye on those physical grain buying locations, and optimizing where you sell that physical grain. It's a great tool. If you don't know about it, call us. We'll talk you through it, because it can help you find additional cents here over where you typically market your grain. So thanks a lot for tuning in. We'll see you here Thursday for the Export Sales Report.